Good day traders, Stacey Burke from Stacey Burke Trading, and today just following up again on keeping your Forex trading simple. We're looking at the British pound and August 22nd, 2016. One of the things I keep talking about is just keeping things really simple, and I'm just the purpose of me doing these videos each day is just to demonstrate 4 simple things that I look for. And each day this is one of the main methods that I look for. I usually trade after the London Open, and I look for some really simple things. So you see the colors on the screen. The pink is Asia. Asia's sort of pre-market open. The yellow is Frankfurt London Open, just a 2-hour box. And again, the light blue is the pre-market and first hour of the US market. Now I look to see sort of you've seen my videos perhaps on the opening range. I look for the market to establish an opening range. These are the most important times of day, and obviously between the London Open and the London close, that's the highest volume and the highest probability of when we're going to see the market move. So I look somewhere in this area for number one of the things I talk about is a pattern break. So obviously just looking at Asia, you know, we can see straight away we look for support and resistance levels. In this particular case, I look to see a pattern break if I was trading Asia, and then I look for support and resistance levels to be either violated or congested. So in this particular case, we see a breakout of the pattern from Asia. Now if this was a marginal break or a false break, we would see that most likely pull back within 2 or 3 bars. This is a 5-minute chart, so we see that market go low. The opening of the market was down here. We don't see the usual textbook sort of congestion pattern that I look to see, but we do see a 2-legged pullback. Bears entered the market and they were able to scalp, you know, roughly a 15 pip range there. Now this is not what I look for my main setups, and we'll get to that in a second, but I do look for a pattern break. I look for a violation of a support or resistance level, or a collection, and this is a compression inside of a support and resistance level just after the market is opening, and it did explode out. But mainly when I'm looking at London, I would then look for some kind of trend line or pattern line inside somewhere around that open of London and Frankfurt. So the market has given us a support level. It's given us a lower high. As Frankfurt and London start to open, we see the market establish a new high. Then the market gives us our compression inside of the moving average after breaking out, and this is where we look to see price coil. We want to see price coil because it's building up pressure. When we build up pressure inside of that moving average, and we've had a pattern break, we've let the market establish its opening range, it's taken out highs, then it's given us a tease break. If you're not familiar with that, read Bob Volman's Forex Scalping and Price Action 5-minute trading books. This is one of the main patterns he looks for, and I have to say this is one of my favorite types of setups. Now even if you don't position yourself inside of that coil, which, you know, aggressive traders may do that, and they may place their stop somewhere down here if you wait for the break. Now this is where traders can get nervous because then they feel like they're chasing a trade. But there are two ways to enter that. You can decide which works for your best interest in terms of your risk aversion. Either way, I would suggest that you're only looking at roughly a 1 ATR stop in this, you know, area. So if you're wrong right away, because this should move. So the market breaks out, gives us a 1 pullback with you can see the 2 bear legs, so a 2-legged pullback, and then resumes its upper thrust, gives us our lower high, our failed double top. But again, aggressive traders would have looked to have either traded it on the way back up to that high, or even just with a set target somewhere in that, you know, maybe 30, 40, 50 pip range. So certainly a 3-4 to 1 risk reward. And again, just looking for number one, pattern break. Number 2, support and resistance. Number 3, coiling inside of that moving average and a support or resistance level, staying on side of the moving average, and then sticking with the major time frames once the banks have come into the market. So, if that makes sense, traders, I think that you'll see, like even going into the US session, I don't often trade that as it starts to get a little bit late for me, but same rules apply. You can look for number 1, a pattern break. You've got your support and resistance levels, and this is a great example here of where the market took out the low and it coiled around the moving average. Now, traders could have been trapped into thinking this market was going down, but if you notice, it pulled back inside of the range after the market had broke out. And that's a really important thing, because the market, once it's back in range, will often retest one of the extremes. And if you're not familiar with market profile, you can read Dalton's book on market profile, and he explains some of that. So again, this can apply on any time frame. If you're using longer term time frames, longer than an hour, or if you're end of day, then obviously the market, the bank hours don't really apply. But just looking for some simple patterns, keeping it simple. I don't often ever use one of these by themselves, but I will look to use a couple of these together to give us, a high probability opportunity of positioning ourselves in the direction of the move. So, in this particular case, we have a range established, and if you look closer here, you can see a upside down head and shoulders. So neckline was broken. Aggressive bulls would have entered the market and been able to, look at a 30 to 40 pip move there. Again, look for the market to move after the banks have opened up shop. They come into the market, they're going to move it one way or the other. And often, if you just start to use some simple support and resistance levels, you'll start to see that this starts to come together for you, traders. Hopefully you got some value out of today's videos. If you keep it simple, you can duplicate that. If you can duplicate your approach to the market each and every day, you can get some consistency and some reproducibility to your results. Stay focused, traders. Stay disciplined. Keep it simple, and may the markets go with you. Hi, traders. It's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.